What's up, everybody? Welcome back to the channel. Thank you for tuning in. Today I'm talking about everyone's favorite subject, the coronavirus.
The coronavirus.
Okay, it's a virus, it's out there. People are dying. My condolences to all those people. But I want to talk about how the coronavirus is going to affect the fashion industry and the economy. Now, this virus is out there. It's spreading fast. People are getting freaked out. Are we all gonna die? I don't know. I have no idea. Should we all be doomsday prepping? I don't think it's that bad. But what do I know? This is not a video for advice. This is just my views on this situation in fashion and the economy. Okay, so we all know the coronavirus began in China and it got pretty bad. So it basically began through China's New Year, which is in February, the beginning of February. They take a month off anyway. But what happened is they didn't get to go back to work. So for about 3 weeks or a month after New Year's, which they already had taken off, they don't get to go back to work, because the government had said you can't go back to work. We can't have people in groups working in factories. So that means production basically came to a standstill. Production in China came to a standstill. Now, what kind of things do they produce in China? Well, they produce probably 90% of the clothing in the world, all the fast fashion. They produce basically everything that goes into a dollar store. They produce everything in the superstore. They produce, you name it, China produces it. China has a monopoly on probably 95% of the world's product. Everything that we consume all over the world, Canada, USA, Australia, New Zealand, Europe, China is making it. So when you think of that on a world economic scale, even one day China shutting down production is insane. It's an insane amount of product they're not making that needs to be shipped all over the world. Now, this isn't an opinion this isn't my opinion, like they shouldn't be shutting down. I'm just telling you the ramifications of this. Okay, so you think about that. One day of China shutting down production is billions of dollars across the world. Billions of dollars in lost revenue. Now, I'm in the vintage business, I'm in the fashion business. So what does that mean for fashion? Okay, brands who are producing clothing in China could be in trouble in the coming months. Okay, the effects of it aren't going to be felt right now because they're still working off product that they probably had shipped pre-winter, selling through their winter. But if a brand goes into spring and isn't able to get their spring delivery of, say, their whole season for spring, that's a big problem. They're in big trouble. Now, I don't know to what extent this is happening, but China being shut down for a whole month, that's a huge amount of production not happening and not getting shipped out. So in my opinion, we're going to be feeling the effects of this come spring, come summer, when it starts to trickle down. Now, I think it's going to be the big brands that aren't diversified in their production that are going to feel this the worst. If anybody misses a whole season of delivery, that's massive. You still have employees to pay. You still have infrastructure to run. Without product to sell, you're really royally screwed. Now, what does this mean for vintage clothing? Well, vintage clothing isn't produced in China. We pick it here in America. We pick it all over the world. It's secondhand. So it's kind of good news for vintage because it's gonna, people are still gonna want to buy stuff. People are still gonna want to go out and spend money and buy clothing. So I think, this kind of could be a boom time for vintage if brands are getting shorted on product. Now, vintage is booming anyway. We don't really need this to happen. It's just kind of one of those things. My brain, I always look at what's happening in the economy. In the last few years, I've really began to study it and learn about it. And when something like this happens, it's, you look at what are the effects. essentially right now, China has said that they are going back to work. I personally I'm in contact with factories. They are back into production now. They say they've got it under control there. So, there's many different views on this whole scenario. Yes, this is bad. People are dying. It's a flu virus. I mean, the bonus, there hasn't been any kids dying from this, which is good news for me as I have 2 kids. No kids under 9 have died from the statistics I've heard. Again, don't quote me on this. And it kind of scales itself. So it's mostly old people who are dying, and as it gets younger age groups, less and less and less people are dying. It is spreading to many other countries right now, so that could have huge effects. To what extent this is going to shut down other countries, we don't know. Is there conspiracies involved in this whole thing? You be the judge of that. I'm not about to post my conspiracy theories on here, but there are a few. Basically, though, in the grand scheme of this, how it's going to affect the economy. Okay, the stock market recently crashed. The stock market is crashing the last 3 days. Well, actually, since Thursday. So maybe the last 4 or 5 days. Stock market, 15% crash, okay? That is huge. That's all of last year's gains on the S&P 500 down. That's a big, big drop. Now, when you look at that, basically what's happening is people are freaking out. People are like, I need to have cash. I need to pull my cash out. I need to be liquid in case this gets really, really bad. I need to be able to spend my money on cans of beans and matches and blankets and Armageddon type stuff. I don't know what goes through people's mind, okay? There's 2 things that could happen in my mind. This gets really, really bad. The state of society goes off the rails. Armageddon type scenario. In that case, your money isn't worth anything. Your money is worth nothing. Okay? In that scenario, we go back to bartering, trading a chicken for a can of beans, trading a can of gasoline for who knows, whatever. But in that scenario, your money's worth nothing, okay? The other scenario is all the other viruses that have broke out, and it goes back to normal in the next 6 months or 4 months or whatever, and the economy is going to bounce back. So that's it. You have 2 scenarios. One scenario, your money's worth nothing anyway, so there's no point in holding on to cash. Second scenario is the economy bounces back and starts to go off again because people regain faith in the system and faith in economic growth. So if you go with those 2 theories, what are you going to do with your money? Well, I know what I'm going to do. I'm going to put my money into the stock market when this is crashing. You can get wholesale prices right now on the S&P 500. Get your money into a good index fund that follows the S&P 500. Sure, it could crash a lot more than it has already. We've already lost all of 2019's gains. I don't really know. No one will ever know when the bottom is going to happen on the stock market. You can't predict it. You can't know it. It could start to go up and then fall again. You don't really know. So the best option is to just start putting your money in now. That's in my mind. This is not financial advice. I am not a financial advisor. So don't quote me on any of this, but I'm just telling you what I see. And that's what I'm going to do. I'm going to be putting my money into the markets because I have faith in humanity. I have faith that we will get beyond this. And when we do, the economy will boom again. This is a small little blip. It's fear. It's fear. The media isn't putting fear into everyone. And they're doing what they do when they're scared. They're pulling their money. They're becoming reserve. It's bad for the economy, but it's good if you know how to play it. And what you got to do is you got to think opposite of the masses. When people are pulling, you should be putting in. When people are putting in, you should be pulling. So that's the advice I've been given, and that's the advice I'm going to go with. Another thing about this scenario is gold has recently hit an all-time high. Gold is killing it right now. Gold acts opposite to the markets because it is a tangible thing. You buy a chunk of gold, you can hold it in your hand. It was the original currency of our societies, the human race. We used gold before there was ever money printed. So when you think of this, it's something you can hold. People want to hold gold, and they want gold. They want tangible asset in their hand because, like if it gets really bad, the banks could fail us. It's not going to get that bad, in my opinion. Again, I really know nothing about this subject. I'm just telling you my views. Anyway, so gold is killing it. That's why you should always invest 10% of your money into gold, because in cases like this, your gold starts to boom where, your stocks are going down, but your gold's going up. And then in vice versa, your stocks are going up, your gold's going down. So it's a safeguard against economic crashes like this. Now, the best scenario is you don't even have to worry about those investments because you've already planned ahead and you're set so that your investments can sit. If you pull your money when the stock market just dropped 50%, you're losing huge. Why would you do that? It's going to go back up beyond that. You just have to wait it out. Anyway, okay, recap. This virus is going to have huge ramifications on fashion. It's going to have huge ramifications on our economy that won't be felt for 3, 6, maybe a year, because it's when the product that we expect to be getting to sell we don't get, then those companies are going to be screwed. Vintage is booming, or adversely, not just vintage, but made in America product. There's a conspiracy for you. So Made in America product is going to boom right now because we can't get products out of China. So Made in America, the high cost of labor, is starting to sound pretty damn good because it's basically all you can get right now. So for me, for Frankie, we make all our clothes in Canada or the USA. Sure, I do a little bit in China, but like very little bit of product, and it doesn't really affect me. So I'm still good. My production has not ceased, and we've just had a couple killer months actually on Frankie, but that's probably nothing to do with this whole scenario. I think the world is going to start to notice how much of a monopoly China has on our production. They have a hand in producing products for every country in the world. So when they shut down, if they shut down for 6 months, it would shut down the world. It would shut down world trade. Like, it would be huge. It would be so huge. I don't even know if we could fathom what that would look like for society at this point. The other thing is, there's these pictures going around from NASA showing the lack of pollution over China right now, like, smog, crazy pollution over China when all the factories are in production. And then right now, it's like clean air over China. Just goes to show you how much pollution they are producing by producing all these products and all these factories. It's crazy. It's also a bit funny that this whole thing went down right before the election. Again, not going to get into conspiracies, but I bet you can make some up in your own head. So, that's it. I don't know. That's my take on the scenario. I've said this before, I'm going to say it again. You guys need to start investing. Get yourself a TFSA if you're in Canada, a TFSA investment account, self-directed, or get yourself a Roth IRA account if you're in America. Find yourself some good ETF accounts to invest in. You can look it up easily online. Okay, here's a good tip. Look this up. I'll put a link down below. There's a guy who wrote a book called I Will Teach You to Be Rich, and he gives you a diversified list of ETFs to invest your money into. Basically, it's going to be like an S&P 500 ETF, a bonds ETF. There's a few of them, so you diversify your money across a few different ETFs. ETFs are it's a fund you put your money into that banks that invests into many stocks, and they follow the top stocks of that niche, and then they drop the low ones and pick up the high ones. So it just keeps growing with the markets versus trying to invest in specific stocks. 95% of the time, the market will beat stock pickers or funds or hedge fund investments, because those investments are run by people. People fuck up. Nobody can guess it. When you're just following the S&P, over the last 10 years, it's like a 10% increase per year. You're guaranteed to get that. Whereas if you pick your own stocks, you might strike it big and you might lose big, and there's no way to know, but 95% of the time people lose. So I'll put the link down below. Look up, go click it. The book's called I Will Teach You to Be Rich, and he has some great advice on ETF investing. Like I said, 95% of the time you're better off to put your money in an ETF. Keep just putting money in every month and forget about it, and watch that compound interest grow and watch it grow. Okay, final thoughts here. Like I've said this before, there's only a few ways to really build wealth. Your earned income, which is the money you're making right now. You're going out, you're selling vintage t-shirts, you're hustling to make $1. That's earned income. That's highly taxed income. And the minute you stop working, the income stops, okay? Investment, it's really hard to get rich through earned income. You got to start taking that earned income and moving it. Put it into investments. Investment income, first of all, is taxed at a lower rate. Second of all, you can just kick back. You could be on a beach in Mexico. You could be doing nothing, and that money is making money for you. So you always want to be taking money from your earned income and putting it into investment income. It's passive. It makes money while you do nothing, owning a property and kicking back while the rent's coming in. And that money that you've put into that property now makes you money on that rent every month. And once in a while you get a call, you might have to go fix a roof or send a plumber there to fix something. That's about it. It's passive. You can do nothing. You get a house, you get 2 houses, you get 3 houses, you get 4 houses, keep laying them into the next house. And all of a sudden you got a lot of passive income happening. You can still sell t-shirts and just keep taking that earned income and moving it into investments, property, different methods of passive income, so that eventually you don't have to hustle t-shirts anymore, and you can just do it because you love it. And there's nothing wrong with it. I think it's great. I have a lot of fun with it, but I know I'm going to be moving my money into investments. I just urge you all to start young, start investing, and now is a perfect time. The market just crashed. Go get yourself invested. It's at wholesale prices. It's just like going to a thrift store, buying a t-shirt for $1 and selling it for 20. Right now is when you can go get the stock market for $1. That's it. Go get it for $1. Flip it down the road. Okay, hope you learned something. That's my take on the coronavirus situation in fashion and economics. I am uneducated in these subjects. I just do a little bit of research. Again, this is not financial advice. Hope you enjoyed it. Peace.